Hey, welcome to the 40 Finance Channel, investors. My name's Jeff Beers. Today I'm going to feature 4 stocks that sort of undervalued or unloved right now in this smoking hot market. These are 4 stocks that have great growth potential, and I think that you can get them sort of on sale right now, at least in regards to what they could do over the next year or so. So we'll dig into these 4 stocks and I'll share my opinion on them and let you know why I think they have pretty good growth prospects. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before investing in any stock. And of course, if you like stock market analysis like this and personal finance videos, please give this video a like and subscribe to the 40 Finance channel. Thank you to everyone who has supported the channel this year. Okay, so if you're new to the channel, I always like to kick off videos like this with a little bit of a parameter overview of what exactly we're talking about. Most of the moves that I make are for the long term, certainly at least 12 months or more, trying to avoid the short-term capital gains tax. And we always have an eye on the longer term too from my desk. So I think all 4 of these stocks fit the profile pretty well. But just to go over in detail, we're looking at stocks that are flat or down with solid upside potential. If any of these stocks are intriguing to you, then in my opinion, you need to prepare to hold them for at least 12 months if you're going to encapsulate all of the potential gains that are out there. Remember, these are flat or running down in the market, and the market is very hot right now. So it could take a while for some of these potential gains to realize. From a metric standpoint, some of the data that I looked at for these stocks were, you needed to have a price drop or a flat price. Perhaps most importantly, we want to see stocks that have potential for strong growth over the next 12 months. And we always take into account the sort of analyst sentiment using the TipRanks dashboard. Now keep in mind with these stocks that you may have to sell them at some point in the next 12 months, depending on where the market sits, if you want to capitalize on the gains and avoid any further declines. A lot of this just depends on market momentum and momentum on the names featured here. But you have to choose your spots, whether you're going to hold for longer or if you're just going to take a short run up. If we see short run-ups from these stocks, you may have to sell and just back out. It's always hard to tell, and that's why I take a much longer view. Rarely, if ever, are you going to hear me talk about a stock and say, next week this one goes up $1 billion. It's just not the way I look at things. I look at opportunities that span over longer periods of time. And in full disclosure, as of today in the recording of this video, I do not own any of these names right now. We're in the week before Christmas of 2020. Some of these stocks I am interested in, but I do not own them right now. All right, first on the board is LendingTree. And I've talked about LendingTree a couple times on this channel. This is an ARK Invest stock. This is a stock that they've held for several years now. And I think that that's where I first was attracted to it, at least from the standpoint of learning more. And LendingTree is an online platform for comparing loan rates across a wide variety of categories, from mortgages to auto loans to consumer loans. And obviously with the pandemic, the use of online tools and lending has become very popular, certainly opposed to going and sitting in a bank for an hour and waiting to hear what rate you might get. Now looking at LendingTree from the past year, this stock traded as high as 368, which was either at this point or over here in June. And it's just had a lot of trouble sustaining that top point. And now you've got it down to 262. I did notice, of course, today I'm doing my video and it went up like 4 or 5%. So I'm not sure if this discount will actually be there when you go to look for it. However, just know that it's trending out of favor. We'll get into that in a minute. And this is a growth stock. There is no PE ratio. You have a negative EPS. Some of that is attributed to problems that they've had this year on the consumer lending side. At the top of the screen, it's not the greatest balance sheet of all time. You've got trailing 12 months revenue of $942 million. cash on hand of 187, and a debt load of almost 700 million. So that's much higher than normally I would entertain, but there are some reasons to be bullish on it. They have invested quite a bit in their platform this year, and 2020 has also been sort of a painful year for LendingTree in the consumer loan segment, and it does look like that should recover into next year once we get past the pandemic fears. All right, so let's talk about why LendingTree stock has been down this year. This is just a snippet from a Barron's article, I believe in early November, whenever their last earnings came out. And I'll skip to the point. LendingTree saw 24% growth in its insurance business, 2% growth in the home mortgage business, but suffered a 68% drop in its consumer loan segment. So consumer loans are basically like unsecured loans, $5,000, $10,000, paying off debt, things like that. And if you don't know the trends in banking during the pandemic, you've seen a lot of people hanging on very tightly to their savings accounts. We also had a spike in unemployment, which has, of course, lowered the number of qualified people for consumer loans. So a 68% drop is not good news by any stretch of the imagination, but what you're probably buying here is the potential for recovery not only next year, but perhaps into 2022 as well. The company said in a letter to shareholders, while partner demand remains suppressed in some of our consumer businesses, we're gaining confidence that the worst is behind us, and we continue to invest in positioning those businesses for long-term growth. And when they talk about partner demand, that is, their bank partners who run these consumer loans. They advertise on the site, they try to bring their loans forward. They also pay sort of a CPA commission to LendingTree. And when you have a situation where the demand from the consumer isn't there, then the partner demand starts to dry up as well. Looking up here from the top right, these are the growth estimates from Yahoo analysts. And you can see the current year, they are going to come in about minus 85% on revenue. So that gets into some of the debt load that we've talked about on the slide before. However, next year is an encouraging bounce back of 279%. So I'm not sure if they'll actually get that high, but it's pretty safe to assume next year is going to be better than this year. And looking ahead for the next 5 years, per year, you have a growth rate of about 12.5% over the next few years. All right, on the TipRank side of things, we always like to see what the best performing analysts think about a stock, and you've pretty much have strong buys across the board. Most of these updates have come in the past month, so right after their earnings report, and the price drop that we saw, a lot of analysts came in and kind of reiterated their position that this stock has a lot of long-term potential. Even 2 weeks ago, this gentleman, Jed Kelly, came in and put $3.95 as a price target. Certainly no guarantees that it would get to that point, but I feel very good that LendingTree within the next 12 months is probably going to be up from its current price in the 260s. All right, next stock on the board is SelectQuote, which is an online insurance provider across multiple categories, including health insurance, life insurance, home, and auto. This was an IPO this year, although the company's been in business for quite some time. It's another one of these online platforms where you can compare rates for insurance across multiple providers. It was an IPO and sits right now at $22.15. The 52-week high on this one is 29, which came back on the IPO date right around May. And you can see it's just sort of lost all momentum since the IPO, and it's kind of landed flat. And you're here at $22.15. I would say with SelectQuote, what we're seeing is not necessarily an undervalued stock, but one that's just lost its IPO momentum, and people are waiting to see what happens next. So I think the win here is that the eyes are off of SelectQuote right now, and there could be potential to get in and watch the stock go up over the longer term. We'll talk about the growth rates here in a second. At the top of the board, you got trailing 12 months revenue of $590 million, cash on hand of $305 million, debt load of $355 million. And compared to LendingTree, when you take into account the revenue coming in and the cash on hand, I think the debt load is fairly appropriate. All right, from a growth standpoint, since this is an IPO, there's not a ton of coverage on this one, but this is pulled right out of their most recent earnings report. And you can see like the range on implied year-over-year growth for next year is all very, very strong. So 58% on revenue, net income at 60%, and adjusted EBITDA at 43%. And this is the low end of the range. On the Yahoo side, sort of aggregating the analyst looks, we have 42% for next year and a 5-year per year growth average of 28%. So very strong numbers. Anytime you can get above 20% in this category as far as projected growth over the next 5 years, that's a really good sign. And that's why I like this one, picking it up at perhaps a stale price, so to speak, because people aren't paying attention. And it could be some easy wins over the next few years. All right, on the TipRank side of things, again, you got an IPO, a small IPO, so you can see the dates here. It's not like you're getting a lot of coverage on this, but those that have decided to cover the stock, you know, fairly bullish at $33 and $31. You know, it doesn't sound like a lot, but on these cheaper stocks, that's a 40% upside or potentially a 50% upside. So I like the possibilities for SelectQuote. I'm definitely going to read more into the company, try to get some more background and research, but this could be one that I'm adding, particularly if we see any sort of market weakness over the next 60 days or so. All right, next on the board is Alibaba, and I think we all know Alibaba. And what you've seen with Alibaba, though, is they were on a great pandemic run-up, but then what we saw was the delay or the restrictions on the Ant Group Financial IPO that is connected to this company, and everything has sort of fallen out of favor from traders on the Alibaba range. Now, this is a Chinese stock, so that's not normally something I invest in, but I think the opportunity here for the right investor is very strong as far as getting something when it's down. You got a P ratio of 27 and an EPS per share of $9.31. And if you sort of assume that Ant Financial stuff eventually comes back online and they get things squared away with the Chinese government, you know, you had a 52-week high of 319 right here, and it just kind of lost its momentum on the bad news of Ant Financial. So if you like the concept of Alibaba and where the company's heading, I think you got an easy $60 in here over the next 12 months and probably more if you want to place your bets that the Ant Financial IPO finally goes through. On Yahoo anyway, we don't have any financial numbers. This is one of the downsides of certain Chinese stocks because they only do certain auditing requirements on Yahoo, and Alibaba did not qualify for those. All right, on the growth side of things, this is again from Yahoo Analyst Consensus. Current year growth of 37%, obviously fueled by the growth in e-commerce. You got another 20% next year. I thought this 5-year projected growth rate was a little low at 3.84%, but I do not study Alibaba very closely, but that's something to think about. If this holds true, then I would say you're more likely in a swing situation, maybe a 1-year swing situation where you capitalize on good news and potentially the Ant IPO, but you might have to bail if this 5-year growth rate really settles under 5%. All right, on the TipRank side of things, we got plenty of analysts for a stock like this. You got buys across the board. And if I took a percentage average, you're probably landing in that 28% or so range. A couple outliers of 41% upside and 40% upside. So very strong sentiment that Alibaba is going up from its current position. And I would say that for a 1-year hold or 12 to 18-month hold and a little bit of good news, you could certainly make some money off of this stock. All right, last stock on the board today is Overstock.com. Overstock.com is, of course, an online retailer specializing in sort of closeout purchases. But their biggest category this year has been, home furnishings, home decor, things like that. Very similar to a Wayfair story, where you see people sitting around, during the pandemic and investing in new decorations and furniture for their home. But you have had a sag here over the last, call it 3 or 4 months. It was difficult for me to find out exactly why this dipped so much, because they have had some good news, but the market has lost a lot of its interest in Overstock, which could be a good opportunity. You can see the PE ratio is not necessarily cheap at 175, but Overstock has started to develop a profitable EPS model, coming in at only 35 cents as of the last 12 months, but I do expect that to go up. From a balance sheet side of the coin, you got $2.2 billion in revenue over the past 12 months, cash on hand of $500,000, and a pretty small debt load, particularly for a retailer that has to resell the items they bring into inventory. So overall, Overstock is in a solid position, and there's more than just the online store that some investors are excited about, so let's take a look at that. All right, I clipped out some points here from a Motley Fool article. I believe this one was in late September or October. Overstock's retailing division is centered in home furnishing space and is enjoying soaring growth as customers shift spending to that niche from other areas like travel and dining out. AKA, you can't travel, you can't eat in restaurants, so you blow the money on home furnishings. I think we've seen that with Wayfair as well. But investors were even more excited about surging valuations for cryptocurrencies like Bitcoin. That spike is lifting demand for Overstock's trading platform, potentially giving the business a major source of earnings in 2021 and beyond. So I guess similar to what you see with Square and PayPal is the addition of a Bitcoin crypto trading platform has really boosted the excitement level for this company. And so that's something to watch with Overstock. They were one of the first ones to be kind of bullish on Bitcoin, if I remember, back in 2017 or so. I believe that their company has some Bitcoin holdings, and then they did this T0 Markets platform, which launched in late October. So if that generates any kind of revenue, on top of the growth that they saw this year in e-commerce, you might have something. It just depends on your appetite, because obviously when you buy Overstock, you're probably buying it for the e-commerce business. Now they're throwing this on top of it. It's not a very direct play, I guess I would say, but money's money, and they are expanding in that direction. Now off to the right here is probably where we see the faults in Overstock. You're going to be up 126% in revenue this year, but next year, as the world returns to normal, it's sort of minus 83% is what analysts are projecting. So that takes your 2-year revenue cycle, just barely over flat, and that's probably why the balloon is kind of popping here. But on the bright side, something you don't see a lot of is this 5-year projected growth rate over 100% per year. So a lot of wide-ranging numbers in here, and for that reason, I would encourage anyone to look deep into Overstock's sort of business plan for the next 3 to 5 years, and you're just going to have to figure out, which part you believe in, and can the company come out of next year, which is basically just a negative comp standpoint, right? It's not going to be that the company isn't doing well, executing and making sales. They just have to comp these pandemic profits, which is, essentially free money for any e-commerce company. But now you got to stand in front of investors, call it June of next year, and say, hey, June of 2021, we were down, let's just say 83%, but that's just because last year was so good. And what can happen in that situation is the stock can go down. All right, on the TipRank side of things, we only have a couple really fresh updates. I guess you could include 2 months ago in there, but you do have buys across the board. The most recent analyst came in at 130% upside with a price target of 140. You know, that might be a little high, it's hard to tell. But either way, I would say with Overstock, I would feel pretty decent about taking a chance on this one from both a balance sheet and a forward-looking growth sentiment. If you can hold a stock like this for a couple years and not worry about trying to get out of it, then I definitely think that there's money to be made at the current price. All right, guys, so those are 4 stocks, each with a little bit different story, right? But generally speaking, you've got lower momentum, lower sentiment, lower valuations. And in this market, man, it is hard to find opportunities like this because everything is trending so high. Just to be transparent from my situation, I'm not buying a whole lot in December. In fact, I haven't bought anything since the election because I just don't like how hot things are getting. And I'm very comfortable with how I've managed my cost basis to date. So I am waiting for at least a small correction, which I foresee coming, you know, somewhere in December, January. I think prices will drop a little bit, maybe more, but I'm not going to be a soothsayer who says, you know, epic collapse coming. I just think we're due for some more red days than we've seen, and that will probably be the next time I jump in. And when that day does come, I'll definitely be thinking about the 4 stocks I listed here. As always, I try to only present stocks on this channel that I would consider myself. I think each one of these stories has something to it. Anyway, I hope you guys enjoyed this video. Please give me a like and subscribe if you did. We'll see you on the next video.